Well, I want to welcome aboard the one and only Robin Cross of StoneX in Chicago. He is who we call on each week at this time to kind of analyze and make sense out of the lumber market. And of course, that's got a broad scope of influence here. I mean, it's related to the housing market, the paper market, you name it. And nowadays, you don't know what's going to happen. Heck, Robin, we may need some wood just to stay warm this winter. I don't know what's going to happen here, but give me a rundown, if you would, on what's going on with the market here this week right now.
Good morning, Marlon. I'm going to go a little off script based on what you just said. You know, lumber, I've always said it for like the last 25 years, is a key economic leading indicator. Usually big moves in like the Dow and S&Ps are always spearheaded by lumber first, both down and up. So it's interesting that you said that because it's totally true. I've been saying that forever. I said, you want to be a good equity trader, just watch the lumber, right? So, well, good morning. Thank you for having me. Let's jump into some prices this morning. So we got November trading. It's nice to be up. 485.50. That's up 350 this morning. January is currently trading at 490.50, up $4. We had 88 trades in the front and 118 in the deferred. You know, Marlon, although lumber prices continue to trade in the same sideways range for well over a year, the lumber market saw an actual significant uptick in volume activity this week. And that was due in large from the expected hedge fund roll of their November short position into January, providing some much welcome volume and movement to the market. So we'll go over open interest a little bit. Open interest coming into this week was about 4,413 contracts in November versus 3,556 contracts for January. The total open interest coming into this week was 8,196. Now, this morning, November has 3,425 contracts left open, and January, the now lead contract, it flipped this week to 5,492, the highest total of open interest in the new truck contract to date for a total of 9,234 contracts. That's a gain of about 1,100 contracts this week alone. Just to put that in perspective, last year's October open interest in the truck contract was only around 300 or so. So we really have to look at the legacy for a real comparison. And the legacy open interest was about 2,200 contracts. So we have to multiply that by 4 to equal today's quarter-size truck contract. Open interest come into about 8,800 contracts last year. And the reason this is significant because this is the first real time the new contract equal or exceeded the legacy in material volume. So that's very important on that aspect of it, the material volume, not necessarily, trade volume. So maybe there's hope for usage of the new contract after all, but the hedge fund roll wasn't really the only reason for increased activity. It may have been the catalyst that moved the market, but increased activity also came from price action caused by the roll. We saw November fall from last week's high of 508 down to major support 478, so a loss of about $30. And in your now lead January, last week's high was 1550 to yesterday's low of 483. So we had a bigger loss over there, a loss of $32. So there's also this price action, also put the market into previous levels of major support for the basically last 13 months. So therefore, encouraging short covering and some new forward sales for the first time in a long time, especially in Jan and March. It's very rare, Marlon, to see January, the deferred second and third option close to the prevailing cash market. And cash was reported this week coming in, let me just take a look at my notes, around 370 mil. That was down 5 from last week. Random Lengths reported also delivered Chicago was 478, down 5. So customers they're really starting to look at their forward needs across the board using today's prices. Although reported cash remains on the slower side of things, it just hasn't paid you to be short under major support. We had one exception in May last year. That was it. So you got to be careful down here. Furthermore, it's much more liquid to have any expected inventory needs covered through the board versus than having the cash sitting in your yard, right? And then lastly, there is still this expectation of, kind of some extended mill holiday curtailments. They usually take a couple weeks down, but due to the depressed prices for so long, the market is really expecting, a little more curtailment than, a couple extra weeks than we're used to. So we got to keep an eye out on that. And I'm just happy that this baby's been trading. So thank you very much.
Well, thank you, Robin, for the update. I appreciate that. Boy, covered a lot of ground today, and great job on that. Robin Cross is with StoneX, and he's located in Chicago, and we get updated on all things related to that massive lumber industry each week at this time. I want to take a quick break here, and then we'll come back, and I'll get you updated on the latest developments in our livestock trade.